Retirement Advisors with the Gradient Investments weekly update for all the information for the week ending March 3rd, 2023. Let's get into stocks. Equities were stronger last week across the major global indices, with the S&P 500 up almost 2%. The Russell 2000 was up just over 2%, and the NASDAQ was up 2.61%. Now, overseas and developed markets, which was the EFO, was up 1.81%, while the emerging markets increased 1.68%. In the U.S., the best performing sectors were materials and industrials, and the laggards were utilities and consumer staples. By style, growth and mid-caps were the best performers. So for fixed income, economic data released in recent weeks suggests that the economy and inflation may prove to be resilient and more than initially anticipated. Basically, we still have inflation. It's sticky. It's not going anywhere just yet. It's not transitory, as they say. Yes, we're still feeling that, and it is going to hang around. The yield on the 10-year Treasury touched 4.08% midweek for the first time since last November, before closing the week at 3.97%. The 2-year Treasury yield was 4.9 on Thursday, 1 year below the high, closing at 4.86. So as we say, the yield curve is still inverted. So let's get into commodities. The price of corn, which is a primary feed of livestock meat, has begun to rise again after a tumultuous 2022. From its peak price of $8.16 per bushel in late April last year, corn prices collapsed to $5.62 by late July. They have now been on the rise since then and currently stand at $6.48 per bushel, which has caused livestock producers to rethink how long they will continue to feed the animals the way they are. So what are they going to do, starve them? I don't understand this one. Okay, so let's talk about many pork producers have pushed the meat to market, causing pork prices to decline sharply in the latest producer price index report. They don't want to feed them, they're just ready to put them to market. Economic data. The index, which tracks the services side of the economy, which is vast majority of the U.S. economy, slipped slightly to 55.1 in February from the prior month, but came in ahead of consensus expectations. Remember, any reading above 50 does indicate growth. There was a notable decline in business activity within the index, while new orders and exports showed strength. And the index, which tracks economic activity in the manufacturing side of our economy, contracted in February for the fourth consecutive month as new orders, production, and backlogs contracted. This was lower than the consensus expectation. The price index registered a 6.8 increase compared to January figure. Mortgage applications for the last week in February declined almost 19% from the prior month, and the purchase portion of the index is down 24.7% from 4 weeks earlier, while the refinance index is down 4.8%. Mortgage rates on a 30-year fixed loan are now at 6.71%, which is up 50 basis points from the prior month. Let's get into some company news. Broadcom, which is a core-selected G50 holding, reported quarterly results that beat expectations, and management gave guidance for the current quarter that was ahead of expectations. Also, investors were encouraged by commentary surrounding Broadcom's future in artificial intelligence products. Shares were up 9.5% for the week. And CRH PLC, which is a G40 holding, reported revenues and earnings that beat consensus expectations. The Irish building materials provider also said that it is moving its primary listing to U.S. This is where the company generates 63% of its revenue, and it's expected to benefit from the U.S. government infrastructure spending for increased efficiencies. Shares were up 11.55% for the week. And how about Dexcom, which is a core-selected G33 holding, rose 11.65% last week after Medicare announced increased coverage for glucose monitors under the new standards. A broader number of people suffering from diabetes than expected will have government payments from continuing glucose management. Whew, that's it. That concludes this week's weekly commentary. Thank you so much for being part of our ARA family. If you need to contact us, please call us at 855-756-5700. Visit us online on YouTube, Facebook, our website, aradvisorsinc.com. Make sure you get our newsletter. Make sure you do the how much tax am I going to pay in retirement if we're not already making sure of that. We've got that nice link on our website. Share that with friends so everybody knows that we're kind of in a tax situation right now. We have an opportunity to pay less tax because they are going to go up. So let's make sure we're taking advantage of that and reach out. We'll take care of that for you. So God bless you. Take care. We'll see you again next week.